The jewelers, it's been a boom time.
TN Gadgil, yeah. 5.5%.
TN Gadgil is the cheaper one. And of course, this one is 100 times, I think, Senco. In terms of valuations. Well, Tata Power is the stock in focus. The company set a revenue target in excess of 1 lakh crore by 530. To know more about their ambitious plans, my colleague Vivek caught up with the company's MD and CEO, Praveer Sinha. Began by asking Mr. Sinha about the targets set last year to double revenue, EBITDA and PAT from FY23 levels. He quizzed him to understand if there has been a rollover of expansion of those targets for FY30. Listen in.
We have shared the plans for 2030, and as you know, the revenue of such companies is dependent on what is the cost of raw material, in our case mostly coal, and also this cost of modules. Those have come down, so our revenue target remains more than 1 lakh crores in 2030. Of course, our EBITDA and PAT have improved, and our PAT last year was 4,200. We are looking at 10,000 plus in 2030. So, huge ambitious target that we have set for ourselves. And, we always calibrate our performance to ensure that it's not just about the numbers, but also the quality of numbers which are there in terms of better margins and better returns for our shareholders. So I think you will continue to see excellent performance from Tata Power. Very strong foundation, very strong fundamentals, and I think we are geared up for bigger things.
So over 1 lakh crore of top line expected by FY30, almost 10.5% PAT margins what you're anticipating. That's going to entail a lot of capex. Could you give us a year-wise breakup of capex? This year you have very ambitious plans, and we are assuming that majority of the capex will go towards renewable capacity addition.
So this year we are spending about 21,000 crores of capex. We also expect that going forward we'll have an average of about 25,000 crores of capex every year. Nearly 50 to 60% of our capex will go to renewable area, which is large utility scale, and some of the manufacturing that we have done, as also some of the group captive projects. We also expect that our transmission business will expand the capacity. Our distribution business, we will have capex. Apart from the existing distribution, we are looking at distribution in few more states. And also our hydro investments, so whether it is the pumped hydro in India, in Lonavala, both Bhivpuri and Shirota, or our investment in Bhutan hydro projects, where we will be an equity investor. So I think we have a very balanced portfolio of investment, and we expect that they will continue to give us very good yields and returns over a period of time.
So like all of us, I'm sure you're also looking at the equity markets, and especially some of the names, with very similar facilities in terms, as well as capacities in terms of solar cell and solar modules. They're enjoying very strong market capitalization. Would you be tempted to go for an IPO for this particular part of the business, the module as well as cell manufacturing, and especially given the fact that a lot of the companies are now talking about value unlocking in this particular space?
So we are already a listed company. Many of them were not listed companies. So our value is already there in our existing portfolio, and the value for whether it is for the renewable business or thermal T&D. So it's already part of our valuation, and I am sure the market will give weightage to the investment and to the operation of this plant. We feel that we will be able to get the right value, because many of the investments that we have done have started now showing results. So we are very confident about this.
We've been tracking your company for a while, and last time you spoke to us, solar EPC order book in excess of 15,000 crore, majority dominated by in-house plants. Given the fact that players are now enjoying much higher margins, would you be looking at doing third-party EPC, and also any export plans on the horizon, given that US margins are much better?
So at this stage, we have some third-party projects. It is right now 60-40, 60% is internal and 40% is external. Going forward, it will remain more or less on the same track, because we are again very conscious that in third-party EPC, our margins have to be protected, and many of the times the unknown is very high. So that's why we will ensure that our returns are guaranteed, and for that balanced mix of internal external projects will be good. We also will now be working a lot on a rooftop,
Right.
where we are already having a 13% market share. We're looking for 20% plus market share. From last year revenue of nearly 1,700 crores, we are looking to cross 10,000 crores by 2030. So that's a substantial increase in our revenue and returns on that. So I think we are fully committed to supply within the country. Most of the supplies from the plant will be within the country. If at all there is some good opportunity outside, small quantity may get exported, but majority will be used within the country.
We just want to talk about the Discom business as well. You know, Delhi, you've been doing it for almost 25 years. Odisha has been a very good turnaround. Privatization of Discom, something that the government has spoken. You mentioned about two states, Rajasthan and UP. How serious are you, and what is the kind of visibility you see from privatization of Discoms?
So I think many of the states are in discussion, and I expect that both the Rajasthan and UP will go through the Discom PPP process, and we'll play a substantial role in that. We have the core competence, we have the people who can run this type of business, and we'll be one of the major players in this area.
Lastly, sir, anything as far as long-term PPA agreement as far as Mundra is concerned? Are you still in talks with various state governments?
Yes, we are in discussion with the state governments, and we should be able to close it quickly.
Any timelines that because now you have visibility for 5 more years, right?
Yeah, absolutely. No, we definitely would like to close ASAP, but there are 5 procurers, and you need to get everyone on the table together and build a consensus. So we are in discussion with them. Hopefully, we'll be able to do it much faster.
Okay, well, that's my colleague Vivek Iyer in conversation with Mr. Praveer Sinha of Tata Power. Interesting chat there. Stocks up about 1%. More highlights from the CNBC TV 18.